Question: what would you do if you lost your job? Do you have enough savings to tie you over until you found another one? What if you incurred a large, unexpected expense, perhaps one associated with a broken down car, a veterinary bill, or a home repair? Do you have enough funds set aside to address these issues? Well, instead of being caught flat-footed by life's financial surprises, it's better to plan ahead by establishing and funding an emergency fund. So what exactly is an emergency fund and how much should you have in yours? Watch this video and find out. Greetings, my name is Andrew May, investment advisor and certified financial planner practitioner. I've created this channel to provide you with real-world strategies designed to assist you in navigating your personal financial life. These are the same strategies that I share with clients in my investment advisory practice, as well as use personally where applicable. And you know what? There's no reason to keep these strategies a secret. I would prefer to share them with you so you can live a more fruitful financial life. So be sure to subscribe to the channel and join me on this financial journey. Now, the purpose of an emergency fund is to create a buffer between you and your experiencing a financial hardship due to a job loss or a large unexpected expense. This might come in the form of a veterinary bill, the need to purchase a new car or have your car repaired. You could be having housing-related issues and need to make a repair. You might have to make last-minute travel plans to go somewhere, which would be more expensive than making your reservations in advance. And there could also be health-related issues that you could be facing where you have to pay for ongoing treatment and medication. If you have ever experienced a financial emergency for one of these reasons or perhaps another, please tell us about it in the comment section below. I'd find it particularly interesting, as I'm sure other viewers would as well, people who could learn from your experience. Now, how much should you keep in your emergency fund? Well, as a rule of thumb, I would consider squirreling away anywhere between 6 months to 12 months worth of non-discretionary living expenses. What are non-discretionary living expenses? Essentially, these are expenses that you're going to have to pay every month just to get through life. They could be associated with your housing, with utilities, with your transportation, expenses that you're going to have a really difficult time cutting out of your budget. To calculate these expenses, I recommend printing out a copy of your checking account statement as well as your credit card statements. Then take a highlighter and go through your statements line by line and highlight the expenses that you have to pay month in and month out. The expenses that you can leave out are your discretionary expenses. These are the ones that might be associated with entertainment or travel or things that you enjoy doing but don't necessarily have to do, say in the case that you lost your job. Add these highlighted lines up from your account statements to determine what your estimated monthly non-discretionary expenses are going to be. That was a mouthful, right? Next, multiply that number by the number of months that you want to have your emergency fund funded for. Again, as a rule of thumb, I would recommend anywhere from 6 months to 12 months worth of living expenses, but this is really going to be determined on a case-by-case basis. If you're a single person, you can calculate this for yourself. If you're married, then this is an exercise that I recommend you and your spouse complete together. The main point is to have the funds available in case you need them. The downside is that you might have to change your lifestyle if it turns out that you lose your job and don't have enough money to support yourself. If you're a single person, this might mean moving in with friends or parents, and if you're married, it could mean moving in with the in-laws. Okay, now, where to keep the funds? First, it's important to realize that the term emergency fund or rainy day fund is merely a concept. There's no such thing as an actual account titled emergency fund or rainy day fund. I would like to alleviate any confusion so that you don't walk into your bank and tell them that you want to establish an emergency fund. What you will want to do is establish a type of account that's safe, that's liquid, and that's interest-bearing. This can mean going to a bank and establishing an interest-bearing checking account, a savings account, or an interest-bearing money market account. I would not invest your balance in such a way that would subject your funds to volatility or illiquidity. You should be saving and investing in other accounts. Your emergency fund is not designed to provide you with high returns, but again, with safety and liquidity. You want the money to be available for you if and when you need it. Now, how to save. First, you should be living within your means, and that will provide you with a little more flexibility to divert funds that you might normally spend into your emergency fund. If you'd like to learn more about living within your means, then check out the video that I have on my channel titled Living Within Your Means, an Advisor's Opinion. At the time of this video, it's the only other video I have on my channel, so it should be easy to find. However, I'm going to put a link up above. Click on that, and you can go check out that video. Another great way to save is if you're fortunate enough to receive financial gifts, or maybe you get a bonus from work, then you can divert part of that money into your emergency fund. The third way to go about it, which is one of my favorite ways, is go around your house, and if you can find items that you no longer need, then you can put them up for sale on either eBay, Craigslist, or using an app known as Nextdoor. This is one of my favorite ways to raise extra cash because it's really surprising how much you might be able to get for items that you have around your house or apartment that may not have a lot of value to you, but surprising amount of value to other people. As an example, I sold 2 vintage skateboards that I had from the late 1970s, early 80s for over $1,000 on eBay. There are collectors out there, people who will pay a lot of money for some of the stuff that you have sitting in your closet. Another example, I had some vintage guitar pickups that I put for sale on Craigslist. I ended up selling them to Sheryl Crow's guitar player. How cool is that? Finally, I had a bass guitar that I bought off of eBay, played it for a couple of years, was never very good at it, put it up for sale on Craigslist, and the bass player for Drivin' and Cryin' came over to buy it from me. That's probably a band many of you recognize. You just never know who you're going to meet on Craigslist. But it's not such a good idea to have people come over to your home like I did. Not a good idea. It worked out for me, but I really prefer to meet people in public. And if you're going to sell personal items to people in public, meet at a Starbucks or somewhere where there are other people around. I don't want anything bad to happen to any of my viewers, okay? So, in summary, please remember the following. Step 1, determine your non-discretionary living expenses. Step 2, determine how many months you want to be able to support yourself in case you lose your primary source of income. As a general rule, I'd consider 6 to 12 months. Step 3, determine what type of an account you want to deposit your monies into. An interest-bearing checking account, a savings account, or a money market account. In step 4, plan how you're going to come up with the funds. Will it come from your current income, maybe a bonus, a gift, maybe selling items on Craigslist, on eBay, or on Nextdoor? Maybe I'm the guy that buys some of your old merchandise. You never know. And remember, it's vital that you establish and fund an emergency fund so that you're in a better position to survive any financial hiccups that may occur. And believe me, they occur. I think I've experienced most all of them. If you found this information helpful and feel as if it could have a positive impact on your financial future, then please hit the like button and consider subscribing to the channel. If you know someone who may also benefit from the contents of this video, then please consider doing that person a favor and sharing the video with them. Until next time, I'm Andrew May, investment advisor and certified financial planner practitioner, and I believe that you, yes you, can do this.